Well, there's a big stock market sell-off this week, and I don't think a lot of people have taken time to step back and figure out why exactly this is happening, because it's not so much just one bad headline that made stocks sell off. It's not like we had these situations to where Trump will tweet something about China, and then that'll lead to a bunch of trade talk pessimism, and then people sell stocks off for a day and a half. This recent sell-off in these past couple of days, I'd say it has more to do, is less headline-driven rather than it is headline-triggered. Meaning that the ground was already sort of fertile and ready for a sell-off. The market was in a position to sell off, and it's not that it was pushed; it's that it actually fell. And so the trigger that ended up launching this latest sell-off, which isn't too substantial yet. I mean, I think we're only like 4% off the highs, but of course that's frightening, for Wall Street to be 4% off of all-time highs. But anyway, it was started by the ISM manufacturing number, which came out yesterday and was quite disappointing. The way ISM manufacturing works is that it's an index, so it's a sort of a relative thing. It's not exactly an example of hard data, but the way it works is that a reading of 50 is neutral, meaning neither expanding nor contracting. Anything above 50 is expanding, and anything below 50 is contracting. And so for 2 months in a row now, the ISM manufacturing index has come in below 50. And that means that manufacturing in the U.S. is in contraction, and in fact it contracted more this month than it did in the previous month. And this month's contraction was, the index came in at like 47.8, and that is the lowest reading since 2009. Now, of course, it is not anywhere near the lows of 2009, meaning that in the throngs of the last recession, the ISM number got well below 47.8, but it hasn't been as low as 47.8 since the recession. And on top of that, today we got the ADP jobs number for this past month, and that came in below estimate, meaning that less people were hired in this past month than the market had been expecting. So we got that also triggered a bit of a sell-off. But again, I need to stress that these numbers are not entirely what's motivating the sell-off. The sell-off was primed to happen because there's been a hesitancy. If you check the charts, and I'm not a chartist, but I follow some guys who I think are pretty good at reading the charts and try and glean some information from them. The market's kind of been in limbo for the past few weeks. The S&P has broken the uptrend for 2019, and when you break trends, normally that's when things can kind of go out of whack. Whether once a trend is broken, you don't know whether the market's going to go up or down. And so we've kind of just been stagnant for a little while outside of that trend. And what ended up happening was there was what's called a back test, which is where the market goes back up to hit the trend line and test it to see if it can get back above the trend in order to sort of regain the positive trend. And that back test failed, meaning that it went up to the trend line and then came back down. The market was not able to get over that barrier, and so that's now looks to be a level of resistance. And normally, if a market fails a back test, that is a bearish signal. So there's been a possibility that there would be a sell-off at some point. And so what really the market's been waiting for is it's been trying to figure out whether or not the recession that some people have been fearing, whether those are genuine fears, whether those are legitimate fears. And what these two numbers, the ISM number from yesterday and the ADP jobs report from today, they've just gone to confirm the direction that the market was already moving in, that there is a potential recession in the future. Something else I should point out that we've been seeing is that there has been now after the Fed rate cuts, there has been a sell-off. The Fed has been trying all year to try and pump up the market and talk up things and try create hope in the market with free money magic. And what ends up happening is that the market will go up in anticipation of Fed rate cut, and then of course as soon as it actually happens, it's a buy the rumor sell the fact situation. As soon as the Fed rate cut actually arrives, the market sells off. And since we just had a rate cut, it is not at all surprising that the market is again selling off. So what this says to me is that Fed rate cuts have become impotent. That's not enough to sustain the expansion, as Jerome Powell would say, because despite these Fed rate cuts, the data continues to deteriorate, and people, I don't think, have much confidence in the Fed. And so the Fed will have to take more drastic action in the future. I think that we can expect there to be a 50 basis point rate cut, not just a 25 basis point cut here sometime in the future. And of course, we will be at zero before long, and the Fed will be forced to return to quantitative easing. That is, if they are not already at undergoing official QE4 before they even get to the zero lower bound. Now, I wouldn't be shocked if tomorrow the market's green, however, because there has been some pretty aggressive selling in these last couple days. So I mean, a relief rally would not be at all shocking to me at this point, because of course the markets never go straight down or straight up. Now, the next thing I'll be watching for, however, is the non-farm payroll report, because the ADP number, even though it's supposed to be the same number, it's an estimate, and it normally isn't right on with what the non-farm payroll report is. And of course, the non-farm payroll report is the government number, so I'm not necessarily saying that, hey, you should trust the government over a private company. It's just, the non-farm payroll report is considered to be the definitive number, and the ADP is sort of a sneak peek. So it will be interesting to see what the market does when we get the official non-farm payroll number, which may or may not be even worse than the ADP number. So on that grim note, if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day, and I'd hate to have you miss one. So I'll see you folks back here tomorrow.